starting your journey to financial freedom. Now. You're listening to the New Investor Podcast.
Okay, so we have to stay realistic here. This year will be extremely difficult for all of us. Substantial salary cuts or potential job loss for a lot of folks out there. Now, the International Monetary Fund has predicted a very dark forecast on the growth of the world economy for 2020. We're talking minus 5%. Only China is seeing a positive growth of 1.25% in 2020. But what does this mean for us, and how do we steer through such a year, as this forecast will undoubtedly affect our livelihood in one way or another, and nobody is coming out of this unscathed? Now, it will all come down to revisiting our budget for the year. And I have already done that, but I will certainly have less disposable income like all of us. So it will be my responsibility to ensure I still have enough for basic needs and to maintain my investment plan for the year. How does one do that should you have limited income? And it will all come down to revisiting your expense structure, which will now be focused naturally on the essentials for survival only. It goes without saying that everything else that fall in the category of nice to have should be eliminated right away. Multiple subscriptions, buying that new piece of tech, spending money on your hobbies, committing funds to that vacation you've been saving for these last 6 months. Your objective now is to be extremely creative and have a deep understanding of the word sacrifice. Let's focus on your essentials. As I mentioned before, I have started to buy in bulk at warehouses, usually catering to businesses and restaurant owners. Those places where you discover that there is actually a business-sized box of cornflakes or actual heavy-duty buckets of Nutella and maintain stocks. I only replenish perishables whenever needed, and these are usually cheaper. This proves to be cost efficient and allows to avoid going to the grocery shopping every week, but rather every 3 to 4 weeks. Actually, this will be a new habit I will be maintaining post-crisis. After having reviewed my expense structure for the whole year, I now have a clear picture of my disposable income every month. And I have forecasted so far 4 months in which I will see my livelihood seriously impacted. Remember, the objective is to ensure we do not, under any circumstance, sell equity or spend money from our capital. It is all about survival, and I revisit my finances every single day to ensure I have not missed an opportunity to cut further on my expenses. As I mentioned in the beginning, this whole exercise is done with the only aim at creating disposable income to maintain my investment strategy for the year. I will not compromise despite this crisis. Despite all this turmoil, I have most recently increased my positions on one of my investments and made a seed investment into a startup. Why would I take such a risk now with a startup? Because I believe that as everybody else runs from chaos, the companies that decide or have what it takes to launch during a crisis already possess the backbone and the attitude that will drive them to accomplish incredible things. And recessions have already served as launch pads for incredible businesses before. And I also mentioned that investing in startups is extremely risky and that you should probably ensure that this money you actually can lose this money. This is money you can afford to lose, and you're ready to wait 15 years for any form of return if the business you invested in proved to be successful. The takeaway here is not a hack, but does not lack practicality. During these uncertain times, best is to flatten your expense structure, stay home, let the crisis pass, create disposable income. If it is not the right time to invest, at least that cash can serve you to ensure you weather that storm. If, on the other hand, you see an opportunity on the markets in all this chaos, grab it, as we might not see such times for decades to come. In the meantime, stay healthy and stay invested.